All right. Good morning. Good morning, everybody. We have a full house today when it comes to data. The most obvious is going to be in the morning at 8:30. The less obvious will be from the amount of speakers that we have around the world today who have been known to throw a fireball once or twice. So 8:30 jobs, housing, 10 a.m. and ECB, that's European Central Bank. 10:30 we got Nat Gas report. 11 Bank of Canada, 12 Bank of England, 1:30 US Bank Bullard, and then 2:45 European Central Bank again. Auctions today at 11, 11:30, and 1 o'clock. A very full house. Now, it's most likely going to be the mood is set at 8:30, and that will be the driver for the day, most likely. I really struggled to find a reason or a context behind why any of these Fed speakers would deliberately come out and do something, right? Like we know they can activate like a plunge protection team, or they could shut down a rally. But we're kind of in the middle of a range or a zone, so they don't need to save us from falling, and they certainly don't need to shut us down from an runaway rally. So we need to identify what the message is that they're trying to put out, right? It's going to be a part of a really big deal. So we're looking at England continuing with this really nice advance, just textbook trend, or on a daily time frame. And here, looking at Hong Kong, you see that topping pattern, the reversal across the highs, how we failed to break out. This head and shoulders is beyond done. And even though the base isn't very wide, we could consider this a little bit of a cup, and now with a handle. So I don't necessarily think that Asia's done, but it's certainly off of its high on that high pivot anyways. For Brent crude and WTI, we're still maintaining these lows. Okay, we still got that really nice bear flag that is developed, but we're in the flag portion, right? So no new change on that yet either. I think maybe I might have missed one of those. There's there they just added 3 o'clock Cook on FX Street. Cook was supposed to be like later after. All right, so as you can see, it's a really full house. But honestly, I think it's all going to come down to the first one, 8:30. Nat gas isn't going to very likely, shake the entirety of the marketplace and cause us to leg up or leg down. And the rest of them just don't seem to have that agenda, right? That could really cause us grief. Notice the volume this morning is still a little light. We're still coming in under 100, and it makes sense because today's a very impactful morning. We have the capacity this morning for a move equal to what we had the other day at CPI. Now, looking back, that CPI was a very muted move. It really wasn't very big at all. And mostly that was from the idea that everybody was kind of going their own way. It's hard to be offsides on a significant level if everybody's got their own version of what they think it's going to do. But the numbers today, that's a little bit different. So we are still inside of that Tuesday's range. So even though 2 days have gone by, we've gone absolutely nowhere. Looking at what they wrote in spot gamma, 4100 is basically their line in the sand. They really don't think we're going to get below that level. And then if you were to keep reading, they got to a point where they said if we did get below that level, then we're very likely going to get a gamma flip. And they'll start selling into selling at that point. So important to note, we're not supposed to get below 4,100 today. Same thing is to be said on the top side, 4,200. We're not supposed to get above that. They didn't mention that that would be a flip or would cause buying into move higher. I think that's a higher level. We do not have a market maker move this morning. Interesting enough, with all of this sitting on deck for a potential catalyst event, and there's no market maker move this morning. We do have a 1.56 daily ADR. It lines up a little beyond that 4,200 and 4,100. The downside is certainly much closer than the upside. We had an MDP, but I don't think we're going to keep it for very much longer. Working our way down there right now. Ten-day, 30-minute volume profile. We've nearly got a classic D shape. Getting really close. And, if we weren't very picky about it, we have it. Right? It's just that classic D. When we're at the low, we expect to go to the high. When we're at the high, we expect to go to the low. Well, we managed to get from underneath the point of control to above it, and now we're coming back down to rest on it. What used to be resistance is now looking to be support. But with Econ, there is no such thing as support. There's no such thing as resistance or pivot points or none of that stuff, right? Econ will drive price, and price will drive based on orders on the dome activity, right? Pure trading 101, and nothing else is going to get in the way. It's why we don't spend too much time trying to parse out the levels on a significant Econ event. Best you can do is identify how far it could move. We have a VPOC from yesterday. It's underneath us. So that's 2. Nope, that one's gone. We managed to get through that one yesterday. Nope, before I delete it, see how price interacted with it. Overshot it, punched through it a little bit, dropped back down. Later on, once it was through, came back and overshot it a few times, but was using it as a support when it was a resistance. We don't look at these as a support and resistance. It's more of an area where price can react and respond It's an area where we anticipate a market reaction, and that's certainly what we got. So new VPOC 41.27.5. So what we're looking at here is the weekly expected move. This is the range that was defined last Friday for this week's trading. And we would stay inside of a box like that at least 70% of the time. It's not the idea that we wouldn't leave the box during the week. It's the idea that when the week is over, we would end the week inside the box more often than not. And so far, things are looking a little better this year than last year. When we were in the throes of the worst of the bear market, we were closing outside of that box 7 out of 10 times instead of 3 out of 10 times. So it was wrong 70% of the time instead of being right 70% of the time. One quick little off the cuff way that you can do that to figure out what the accuracy is right now is to go back and count back 10 weeks. Round numbers are awesome. So did it close inside the box last week? Yes. The week before? Yes. The week before? Yeah. That, I mean, it's arguable. I'm going to say yes. If we were on the SPX, it wouldn't be such an argument, right? On this week, yes. On this week, no. Right? We could just go back and count. And I would say off the cuff that we're pretty close to 8 out of 10. And that's pretty good for 2023 so far, right? This measurement is designed to mimic this measurement, right? It's not seeing this data. We can't code anything on Thinkorswim. They can actually get this information from this location. But the developer did the best he could, kind of used, a little bit of napkin math and some shenanigans and got pretty close. Obviously, if you were to hand draw the lines on Friday afternoon for yourself, they would be more accurate than that indicator. But close enough, especially since you have to get the data on Friday after the close or maybe on Saturday. You can't get it, Sunday night or Tuesday if you want to randomly go look at what Tesla's doing and see where its box is. Too late. And the indicator, there's no such thing as too late with the indicator. So it is just worth noting that we're at the high of that box. And one of the reasons I was bringing that up is normally if we talk about selling into selling, where they have to flip and run with the game, it's usually a 2 standard deviation move. And this is a 1 standard deviation move. Really lightly, really faintly, there's a red line way down here, 39.81. And that would be the 2 standard deviation move. I would normally not expect a flip where they start selling into selling to hedge against the move until we move a 2 standard deviation. But that's not what Spot Gamma said this morning. Spot Gamma said if we fall below 4,100, which is basically where we closed Friday, that it's very likely we will flip into selling. And they will sell into the move. Now, there's been talk about Volmageddon and all of that. See if we can. Man, has it been that long? I guess so. This is 2018. And this is what we deemed the hurt locker back then. It's not my phrase. I didn't come up with it. I'm not responsible for it. And then we had this crash into Christmas and then rally back out of the new year. And it was just absolutely phenomenal. This was my first taste of what a bear market looked like, because I started in June of this year. During this time frame, the funds got stuck in this little loop, and they were selling into selling, and we'd get these massive drops down, and then the week would end, right? And they're only running these week to week, and then in the new week they'd get caught on the other side, and they would buy into buying when we broke through the upper part of the range. And it was just back and forth in this time period. And there's some articles on it. You can kind of hunt around for them. That's the one that I remember personally. Remember in the article, they mentioned a couple other places, and also start getting into some individual names recently. I'll post the article later today. There's still a lot of unknown on how we're going to handle these 0 days. And it's kind of part of the big issue of what's going on right now. I just really wanted to bring up the fact that how close that gamma wall, or that 0 gamma flip is. It's really, really close. It's supposed to be way out here. So I pointed it out. I don't know what to do about it yet. At least you know about it. All right, it's kind of the best we can do. Nat gas is up this morning more than 2%. The K-Web constituents are also up this morning, which kind of makes sense, looking at the way they closed. It's going to be more about the bleed over, right? Can it hold past the 8:30 jobs data and the housing data, but just the 8:30 data? And when I said it's going to set the tone for the day, really kind of try to game out two scenarios of what we could get. One is going to be that we get this really big bar, which is a gap, and that gap is going to need to be filled. And that bar could be up, it could be down, it doesn't really matter. It's just the idea that it could be a really big bar. It could be a really big situation, just like the other day. Only unlike the other day, it's very likely going to close on the high end of that bar or on the low end of that bar. And that would be the first starting point. Now, worth noting, if we didn't have Econ today, this setup would be a perfect bull trap. But with Econ, I don't know if it's necessarily going to play out this way. But once we've set a high, we've revisited it at least once, and we come into the open without Econ, we'd be looking for something like a quick run up, get everybody excited, maybe overshoot just a little bit, and then dump it on their heads. But with Econ now, we can't really necessarily play that game. Played it yesterday, right? Had the high set, ran up, faked everybody out, dumped it down on their heads. Of course, later on, ran back up again anyways, but still. So with the data that comes out today, we're going to be looking for a move above 4170, right? Above this high, and then open this morning up there above that. It's going to want to close the gap. So it should very likely spend the rest of the day trying to come back down and close that gap before it does anything else. The other side of this would be Econ comes out, it's really bad, and we shoot to the downside. It's hard to imagine that we're going to get all the way down to 4111 in one shot, right? But we could get maybe about half that distance and then spend the morning working our way back up to close the gap. Now, I'm just using ballpark numbers here, right? We don't have a market maker move or anything like that. We've just got this anticipation that at 8:30, we could see some pretty wild moves. The fact that we don't have a market maker move kind of implies they don't think it's going to be that bad. The hedging isn't kicking in, which would cause us to have a market maker move, right? That's where it would come from. If this number is higher than that number, we would get a market maker move. What would cause this number to go up would be buying, trading activity. Trading activity is what changes the implied volatility within the options chain itself. Because remember, volatility is another word for movement. Well, how do you do that with option pricing? Volatility on a candle chart, yeah, it's easy enough. It closed here and then later on it closed there. We can measure the distance and it moved, and we can identify movement. How do you identify movement in this? So the way that the tool works is one of the things that it looks at is trading activity. How fast the trades are coming in, how big the trades are they one-sided or not? And that will directly affect the implied volatility level of the option on that strike in that series. And of course, this number is derived from all of the out of the money options on each side, not the in the money options on each side. And it's an average of. So if they were in hedging, we would see it and there would be a market maker move. And there's not one. So maybe they don't feel like they need a hedge, that it's not going to be very impactful or very violent, and they don't see a reason to hedge, or they're clear and they don't need a hedge. I don't like that argument. The idea that they would be clear would imply that their pockets are empty and they're not holding anything. I find that really hard to believe. So that leaves me to believe they don't see today as impactful. So suppose 8:30 comes out and it's not impactful. It's even less movement than CPI. We get some gyrations, maybe move around one side or the other here a little bit, and that's about the end of it. We wouldn't look for a gap close or anything like that. We would just, at that point, focus on the next economic event, the next speaker, watch Finance Juice and look for one of them to say something that the market doesn't like. If you did not enjoy trading yesterday's choppy, quick reversals, madness, the simple solution to that is if we're inside of the Globex range and you're finding this difficult to trade, don't trade if the RTH price action is inside of that Globex range. It's an easy thing to avoid. If you want to take that one step further, if we're anywhere inside of the previous day's trading range, don't trade it. Now, I'm not saying that nobody should trade this. I'm just saying if you're finding it difficult to do, quit doing the hard stuff. Do the easy stuff. Right? Practice on the hard stuff, get better at it, and then come do the hard stuff. Another thing that was mentioned in the spot gamma notes this morning was an expectation that everything that's kind of went crazy parabolic in the last few days very likely could see some covering between today and tomorrow, which is a pretty bold statement when you think about it, right? The idea that before the activity has even begun, they're calling for mean reversion and consolidation of gains in those runaway names: Tesla, ARK, Coin. So something to consider if you're not in those, maybe a short-term trade to the downside. And I mean short-term, right? It's not like we would be trying to short Tesla back down through this whole drop. It would be more of an idea of perhaps a 1 or 2 day trade back in the other direction, or Mara or Coin or ARK or anything else that's ran crazy parabolic like this. And then nice recovery in Google. Hopefully you guys were able to participate in that. It was a really tight range that we had. Kept pointing it out. Now we're getting a bit of a Busby on there this morning. I don't know if it's going to stick or not, but when that was a really nice play. It's got a lot of room to recover. Basically, all of this happened because they stuck their foot in their mouth and really screwed up an opportunity to shine like gold. They screwed it up big, but it's not like they broke something, right? So hopefully they can kind of clean their image up a little bit, maybe come out with a better presentation. So with Google here, 50% of this candle is the one that we want to focus on. We got there yesterday, and we're getting that rejection this morning. We need to give that another shot, see if it's going to make it through or not. If not, then running Google back down to 93, maybe even 92. Right, this gap fill is done, so we don't even need that there anymore. I should have kept that line. Still got one way down here. If we can get above this 50 and keep it, then we're going to be running towards the high of this candle, which is just about $100. That'll be a magnet at that point. We'll just gravitate to it. Really, for the rest of these, until we get the Econ this morning, going through any of these names really isn't going to help out that much. We need that data point so that we kind of got an idea of what we're going to do with the rest of this. So everybody, have a good morning. Be careful, be safe.